So this one is the examiner's report from September 2020. So this one is a combination of the earlier exams. Remember now your examiner's report is only issued twice a year. So it says here that one problem commonly seen when describing the audit opinion is that candidates refer to the impact of the misstatement on the auditor's opinion as a modification, but then they do not specify which modification it is. And there's so many different kinds, so they don't specify. So the word modification itself is not going to get you any marks. So the examiner wants you to use this. Modify how? Qualified because of a misstatement, or qualified because of a limitation of scope, or adverse opinion because of a misstatement that is material and pervasive, or a disclaimer of opinion where there's a limitation of scope where the possible effects are material and pervasive. So without these words here, you are not going to get any marks. All right, so the examiner explains quite clearly here the use of the terms modified or even except for are not sufficiently detailed, because if you're dealing with except for, there are two kinds of except for here. There is except for misstatement and except for limitation of scope. So which except for are you talking about? So you need to put that down inside your answer. Okay? And the examiner here also states that if a candidate simply states that a pervasive misstatement would result in an adverse opinion and not a pervasive misstatement would result in a qualified opinion, then they have not applied the standard to the scenario. So in order for you to get the marks for this kind of question, you need to explain using the scenario why it is material. You need to explain using the information within the scenario why it is pervasive or why it is not pervasive. If you do not make use of the information within the scenario, you are not going to get any marks. It has to be within that context. So you have to understand how it works. Now, we'll talk about what is pervasive in a minute. And the examiner is frustrated a lot of the time because the examiner says that when you have got a misstatement which changes a profit into a loss, so let's say, for example, the profit figure is $100 and you have got an adjustment of $110, then that will turn a $100 profit into a $10 loss, right? So the examiner says that in the answers, students seem to think that when you turn a profit into a loss, it is considered to be pervasive. That is not true. That is only material. However, you need to look at this 110 inside here to find out how many items it is made up of. If it is made up of only one item, then it is not pervasive. If it is made up of more items, the cumulative effect of 110, yes, it would be pervasive. So the key here is looking at this figure here to find out how many items are inside there. That's the difference between pervasive and not pervasive. Because if there's only one item inside there and there's only one adjustment, even though it goes from profit to a loss, it is not considered to be pervasive. And the knowledge of what is material and what is pervasive is important because the opinions would be different, wouldn't it? Like qualified will be material but not pervasive, whereas adverse and disclaimer would be material and pervasive. So it's very important that for this paper that you understand the meaning of the word material and the meaning of the word pervasive and apply it to the scenario. Now let's go back to this example inside here. So we're looking at this to find out how many financial statement items are affected. Okay, now the question that people usually ask is, how many is too many? When will it become pervasive? And the answer to that is, I really don't know, because it's a matter of judgment. So if you look at this part here in the examiner's report here, this one here, Yeah. It says it's an area of judgment, so I can't exactly say that, if you have got more than 5 items, that it's going to be pervasive. I can't. However, this is the trick in the exam. When the examiner asks you for the implications for the auditor's report for individual items in Part A, do the implications for the audit report Part B, do the implications for the audit report, each one on its own will never be pervasive. However, if you have got 2 misstatements inside your question, then it is just common sense that at the end of the answer, you are going to look at the cumulative effect. And when you look at the cumulative effect, you've got 2 items now because you've got Part A scenario and got Part B scenario. Yeah? And when you look at the cumulative effect of it, then if you add it up and it becomes like this 110, you've got 2 items inside there, then it would be pervasive. Now, if you ask me 2 items, is it pervasive? No, for the purposes of your exam, yes, because your examiner cannot give you 10 different scenarios so that you see whether it is pervasive or not. It is just not feasible. But in real life, I remember when I was in EY, I've seen audit reports where we have got 5, 6, 7 things which are misstated, and it's still not pervasive, because if you think about the financial statements as a whole, there are so many items inside, and we've only got 5 items that are wrong. May not be pervasive. Okay, it may not represent a substantial proportion of the financial statements, but for the purposes of the exam, if you look at Part A individually, it is material but not pervasive. Part B, material but not pervasive. But when you add it up together, and if you come up with this, then yes, it would be pervasive. So that's important to understand. Another, hang on. Okay, so let's go and have a look at this now. So we've had a look at numbers, we've had a look at limitation of scope, and we've had a look at misstatement. Now it says here, the examiner's report, it says, it should also be noted that a lack of disclosure may not only be material, but could also be pervasive. Like when the examiner is complaining here that many candidates concluded that a failure to disclose a discontinued operation in the SOPL, and then moving on to the balance sheet, you've got the assets held for sale, all of that, the disclosure of the discontinued operation itself, it affects expenses, it affects finance charges, it affects non-current assets, because if it's held for sale, then it should be classified separately, and if it's held for sale, then if it's a division, then the assets should be shown separately, and the liabilities should be shown separately as well. So can you see how many things are affected just relating to the disclosure of a discontinued operation? Of course, if you look at it, non-disclosure of a discontinued operation looks like only one, but look at the impact of it. It impacts so many different things, and by virtue of that, the examiner says that is pervasive. All right, so remember that, okay? So when it comes here, the examiner is saying many candidates concluded, it should also be noted that a lack of disclosure may not only be material, but could also be pervasive. And the examiner gives us the example of a discontinued operation, a division itself. Sorry, we've got a question here. Okay, the percentage for materiality, but the pervasiveness, no, there is no number for pervasiveness. It is an inherently judgmental area. That is why if you are a listed company, if it's a listed client, we always have got the engagement quality control reviewer to come in to double check the partner's understanding of pervasiveness. The materiality part, no problem, because they are numbers. But on the pervasive part, that is judgment. So that's why you need the EQCR to come in to evaluate that. But for the purposes of your exam, like I explained, yeah, if the adjustment turns a profit into a loss, that is only material. The key here is look at how many items here. If there's only one item that is causing this, it is not pervasive. One is not pervasive. One means many. It is widespread. It is all over the place. Like, for example, if you're having a glass of milk and you dropped your glass on the floor, it's spread out. Yeah. So that is pervasive. But if you are eating at the dining table and you just dropped a piece of chicken on the table, that would not be pervasive. It doesn't have a pervasive effect to it. So let's go and see how it applies to the exam question. But before that, okay, let's have a look at this one here. Candidates, so are we okay with that? Okay, I've got a question here. Can I mention in the exam we could engage the EQCR to determine the pervasiveness? No. If it is a quality control question, yes, you would bring that in, like maybe further actions. Yes, you would bring that in, but not in an implications for the auditor's report kind of a question. Implications for the auditor's report has got a fixed number of marks, and you need to know the exam technique to handle that. That will not be inside it. The examiner is expecting you to make the judgment, not the EQCR, because otherwise you will not be able to get the marks for implications for the auditor's report. Are we good? Yeah. So the good thing in the exam is that the scenario will be pretty clear cut for you to make that judgment. I've not come across an ACCA AAA question where the student will have to struggle, because in real life, the partner will struggle, but in real life, excuse me, the partner has got access to a technical department. The partner will have access to the EQCR and any other expert in auditing and accounting to be able to provide support for him. But in the exam, you don't have anybody. You've only got you. All right. So the scenario will be really clear cut. Okay. So there's no two ways in which you can misrepresent. But remember, in your exam, you have to always explain why you're putting down a particular opinion anyway. So based on how you argue your case out, provided it's reasonable, then marker will give you marks. However, coming back to this scenario again, if there's only one item and you make an argument for it that it is pervasive, the examiner will say, no way. That is definitely not pervasive, even if you argue it. Okay, so your argument has got to be sound in the exam. Okay, let's come to this part here. It says candidates should also note that an emphasis on matter paragraph is not an alternative to a qualification of the opinion. An emphasis on matter paragraph can only be used to draw attention to something that is already disclosed in the financial statements. So if you have studied ISA 706, there are 6 things that can be used for emphasis on matter paragraph. Now, what is the definition of an EOM? It is something that is fundamental to the user's understanding of the financial statements, right? But for the ordinary student, what on earth is fundamental to the user's understanding of the financial statements? And your standard gives you these examples as being fundamental. Okay, so I've just arranged them into an acronym just to make it easier for my students to remember. You have got to remember our momentum just now. It is not enough for you to have knowledge of it. You need to know when it can be used. That means you can only use an EOM when the matter is fundamental to the user's understanding of the financial statements. And what is fundamental? We have got the acronym called SUBREM, and the SUBREM will help you to understand which is fundamental. And of course, using the acronym, it will then help us to remember. So what does SUBREM stand for? We will deal with it later. I'll show you. But you've got significant subsequent events. Significant subsequent events is more than material subsequent events. Okay. Significant means far more material. Material. Very, very material. And you've got uncertainty related to the future outcome of exceptional litigation. That's the U. Then you have got the basis of financial statements has changed from going concern to non-going concern. Then the R is revision of financial statements after the financial statements have been issued. Then E is early adoption of an IFRS that has got a significant impact over the whole financial statements. And M is a major catastrophe that the company is facing and continues to face over the foreseeable future. Okay, so in order for you to understand the meaning of the word fundamental to the user's understanding of the financial statements, memorize that. That would help you to apply it in the exam. All right, now let's go and have a look at what I have got for you today. So what we want to do now is, the purpose here is to clarify issues relating to auditor's report. It comes out in every exam. So it's something that we need to make sure that we're familiar with. Yeah? So are we okay so far? Do we have any questions? If there's no, just type in no and I'll move on. All right, so if there are questions, just type it in or something like that, okay? So here, the requirement of the question is a very simple question that I've got. Assess the implications for the completion of the group audit, explaining any adjustments that might be necessary to the consolidated financial statements, and recommend any further procedures necessary, and describe the implications on the group auditor's report if these adjustments are not made. So when you look at the exam question, it looks like there's only one item here. There's only that part A here. There's nothing else. Maybe we should take out the A here. There's only one item here. So the question here is actually implications for the auditor's report. And the examiner has also got this thing called further procedures inside here. And they're giving you 7. So remember earlier we were talking about in order to have that momentum, you need to have the basic knowledge and you need to understand how it works. So the understanding here also includes understanding how the question is worded. So here, when the examiner says implications for the auditor's report, what does that mean? Implications for the auditor's report has got a specific meaning. You must know that, and I'll show you in a bit. So let's read the scenario very quickly. It says, you're the manager responsible for the audit of the Maiden Group, and you're completing the audit of the consolidated financial statements for the year ended 31 March. The draft consolidated financial statements, just put it on a summary here, for the revenue is 18 million, last year is 17 million, PBT is 2 million, total assets is 58 million. Your firm audits all of the components of the group apart from an overseas subsidiary, Abanda, audited by a local firm. So this one is an overseas sub. The audit senior has left a note in the file for your attention. You're aware that the group's annual report and the financial statements are due to be released next week. And the group is very reluctant to make any adjustments in respect to other matters. So, of course, you know that if you're talking about adjustments here, it has to be misstatements. Okay, because for limitation of scope, you don't have adjustments. So, what is happening in Abanda? The component auditors of Abanda, the overseas subsidiary, have been instructed to provide the group audit team with details of a court case which is ongoing. An ex-employee is suing Abanda for unfair dismissal and has claimed 500,000 damages against the company. So there's a dollar value inside there. And remember, we've got further procedures here, and we've also got implications for the auditor's report. To comply with local legislation, remember these guys are overseas, Abanda's financial statements are prepared using their local financial reporting framework, and under that framework, a provision is only recognized if the cash flow is virtually certain to arise. The component auditors have obtained verbal confirmation from Abanda's legal advisors. So you can see here that when the exam question says further procedures, they only obtained verbal confirmation, and for us that's not good enough. We want something in writing from Abanda's legal advisors that the damages are probable but not virtually certain to be made. So it is probable. The lawyers are saying it is probable, but in their country, probable does not have a provision. Probable only has got a note. Probable but not virtually certain to be paid, and no provision has been recognized in either the individual or consolidated financial statements. No other audit evidence has been obtained by the component auditors. Okay, so we have a misstatement. Why is this a misstatement? Can you type it into the chat? But why? Why should the provision be recognized? Yeah, I know it's an ongoing case and provision has not been recognized. Why should it be recognized? I mean, in their country, they don't have to because they're following their local financial reporting framework, so they don't have to. But why? That's right. Joshua is saying here is based on the group financial reporting framework. The group financial reporting framework. It's a subsidiary, and if the group is following IFRS, then the subsidiary will also have to prepare the financial statements using the IFRS. You see, in the foreign country, there will be 2 financial statements and 2 audits, okay? For Abanda. They will prepare the financial statements for Abanda using their local financial reporting framework and audit it, and they will also file this into their company's house or whatever. But for the purposes of the console, they will prepare this set of accounts that are in compliance with the IFRS so that it's easy to consolidate. And for this one, there will be another audit report as well. All right. So what is the exam technique here? So if you've got implications for the audit report, the exam technique that I use here is something called NS. And what does N stand for? The nature of the modification and the severity of the modification. Severity would include whether it is material and whether it is pervasive. And when you add those two together, you will be able to see what kind of opinion you have to give and the basis paragraph. You see, the exam question here says implications for the auditor's report. Sometimes your exam will say implications for the auditor's opinion. If it's only opinion, then of course you don't bring this one in. But here they are saying report, so we've got to bring in the basis paragraph as well. Okay, so let's see how we can write this out. All right, so here I'm going to show you writing it line by line, how we are going to do it. So the first thing I'm going to do here is that put down the story. So Abanda not recognize the provision quiet in their country. I mean, I'm just keeping it very simple. English is not fantastic. Okay, I'm just trying to save a little bit of time. And you're saying that this is a violation of IS 37. Then you're going to explain what does IS 37 say. So the first thing I'm going to say here is that IS 37 must be complied with because the parent prepares financial statements according to IFRS. We know that now it has to be complied with. But what am I going to write next? I'm going to say that a provision should be recognized. Okay? Okay, now help me out with the because. Because there is a present obligation arising from a past obligating event, and there is a probable outflow of economic benefits, and the amount can be reliably estimated. Of course, in the exam, I'm not going to put down an acronym down there. I've got to write it out in full. There's an obligation, a present obligation arising from a past obligating event, that there's a probable outflow of economic benefits, and the amount can be reliably estimated. Like here, it says 500,000 against the company. So the question says that they're not going to put through the adjustment. So I'm going to say now, consequently, what are the accounts that would be affected? So the provision here would be understated and profits overstated. Now let me explain something here. If we are doing this in an audit risk question, I would not say profits overstated. In an audit risk question, I will be a little bit more specific because in a planning scenario, I need to know which financial statements items specifically are misstated so that an audit can be done. So if I was doing this in the audit risk question, remember audit risk also provision could be understated, I would go on to say that the provision and the corresponding expense understated. I would say that if I was doing an audit risk question. But this is not an audit risk question. This is an audit report question. So I would say that the provision would be understated and profits overstated, because now we are going to sign the audit report already. The next thing I'm going to do is I'm going to explain the adjustment. Now, this exam question here actually asked you for the adjustments, explaining any adjustments that might be needed. But even if the examiner does not say that, we will have to put down the adjustments as well. So the adjustments required would be to debit something. In this case, it would be the operating expenses 500,000 and credit the provision for the legal claim, something like that, 500,000. And we're saying, finally, we're saying that if the adjustment is not made, then the financial statements are misstated, and that this is not a limitation of scope. For writing all of that, there is only 1 mark, but don't worry too much about it. There are other areas where you're going to write where you are going to be able to write lesser for 1 mark as well. So how are you going to remember this in the exam? Before we go into remembering, let me just show you something. You know, here it says nature. We want to try and explain to the examiner the nature of the modification. There are only 2 natures. We have got a limitation of scope and we've got a misstatement. So here the nature is that this is a misstatement. The financial statements are misstated. That's the nature. It's not a limitation. We're making it very clear. So how do you remember this in the exam? I use an exam technique with my students. Remember, in order for you to gain momentum, you need to be able to remember stuff as well. Not only the technical knowledge, but the exam technique as well. So that in the exam, you will not be stuck. At least you will know what to write first, second, and you need to know that under the nature, and if there's a misstatement, there are 5 lines that you need to write or type. So what are the things? First of all, we're going to put down the observation, what's happening inside the story. Keep it as brief as possible. You don't have to have perfect English inside there. Then we have got the accounting treatment inside it. Keep it really simple. And here we're explaining that a provision should be recognized because of OPA. Of course, in your exam, please write it out in full. Then we've got the consequently, and we've got the adjustment, and we've got the nature. So in order to get that 1 mark for that discussion or that evaluation, you need to go through OACAN. Now, what if this is a limitation scope kind of a question? If it's a limitation of scope, then you won't have the accounting treatment part of it. You will just have the O and the N. For a misstatement, you have got all 5. Now you have got a misstatement. So I would prefer, I mean, this is just my personal preference, that, remember the exam question says further procedures here? I would prefer to put the further procedures inside this part of my answer because I've got a misstatement and the point here is, what are you going to do about it? So the further audit procedures. Now, this is not how I would write it out. This is how I would think it out. Okay, it's a method of thinking that for any kind of audit procedures, I use the acronym DADA. Why do I use this? Because I want my students to be able to organize information from their question in such a way that would help them to design the audit procedure. Because otherwise, there's too many irrelevant procedures that students put down inside their answer, and it's just a waste of time. So what does DADA stand for? The first one is dollar value. Is there a dollar value in the exam scenario? In our case, yes, we've got $500,000 value. The next thing that you have to do is you need to find out whether it's during the year. And this one is during the year. Why did you need to know whether it's during the year or not? Because if it's during the year, we can go and look for the supporting documentation. If it is not during the year, let's say, for example, the exam question says that the intangible was purchased 5 years ago, then you can't look at the supporting documentation even if it's a new audit, because the supporting documentation would have been looked at 5 years ago in that audit. So it's very important for you to know when this thing happened. The other one here is the accounting standard. And as far as we're concerned, we have got IS 37. And particularly, what are you looking for? We're looking for proof of the obligation, proof that it is probable, and proof that the amount can be reliably estimated. So these are the things that are within the standard itself. The last A here is whether any assertions have been specified by the examiner. And in an audit report question, we normally don't look at the assertion part. Assertion part is usually at the initial stages when you're doing the audit program. That's when you're looking at the assertions. So here, we're not looking at it. Okay, so how would you design the audit procedure? Okay, let's deal with the obligation first. What kind of audit procedure are you going to put down for the obligation? Obligation of a past obligating event. Let's go back to the question here. What would be the past obligating event? Tell me. So the past obligating event will be something like the fault of the company, right? So did the company unfair dismissal? Very good. Okay. So that part about the unfair dismissal. So we want to find out whether there's really an unfair dismissal. How would you find out the unfair dismissal? So here, I want to put down an audit procedure to find out whether there's really an unfair dismissal. No, the employment contract is there. True. Yeah. We want to look at the reason for the dismissal. That's right. To find out whether it's really unfair or not. So I'm going to discuss with vendors management. Right? We might not be HR people, but you'd be able to know whether it was unfair dismissal or not. What's an unfair dismissal? Well, sometimes dismissal without adequate notice, or sometimes it is constructive dismissal where they don't dismiss you, but they make your life so horribly miserable, like they take away your chair and table in the office. Then when you go there, where you're going to sit on the floor. So the company they are almost like telling you, get lost, okay? And that's really unfair. So we would like to see that. So remember, here, the obligation, we need to find evidence of that. Okay, let's go and have a look at probable, whether it's probable to be paid or not. How would you know whether it's probable to be paid? So let's have a look here. The component auditors obtain verbal confirmation from a vendor's legal advisors that the damages are probable to be paid. So how would you know that it is probable? Very good, legal advisor. But they have already obtained verbal confirmation, so now we need to get it down in black and white. And that is a requirement of ISA 501. ISA 501 states that when there is already a lawsuit going on, you need to get written representations from the lawyer to confirm things. It's a requirement of ISA 501. So you need to make sure that you are familiar with the requirements of your 34 auditing standards, at least the key points inside there. Make sure you understand and you know how it works. So let's come back inside here. So we are going to obtain written representations from the vendor's lawyers that damages are. Now, if I just put that down there, how many marks would you give me for the second line? For the first line, I would give me 1. Of course, there's a huge self-review thread down there, isn't it? But if you look at it, every audit procedure must start off with a verb, okay? And it has got to have a source of audit evidence. So the source of evidence here is a vendor's management and the objective of the task to understand. So normally when you're discussing something, it's normally to understand. Discussion, you will never say to confirm. So here, I need to add in the word to confirm. Okay. How many marks would you give? Half mark. Why? Okay. Can you make this into 1 mark? Okay, very good. We need to clarify. I've already put down the objective here. So obtain written representations from vendor's lawyers. That's a requirement of ISA 501 to confirm that damages are probable to be paid. But in order to get that 1 mark, there is something else that we need confirmation as well. And that is the basis of their judgment or their conclusion. You do that, you get your 1 mark. Because it's not enough for us just to get written confirmation from the lawyers and this is probable, and if we ask them why and the lawyer turns around and says, you don't need to know why, just listen to me. We can't do that. Why? Because ISA 620 says that we have to make an assessment of the reasonableness of the conclusion of the expert. So in order to make that sentence into 1 mark, this one is really important as well. So sometimes students have the knowledge, okay, but maybe the knowledge is not specific enough, and therefore when the marks are given, it's always at half. And even if you get everything right in the exam and everything is half, you are sitting at 50 marks, and that's not a good place to be. Provisions come up very often, so make sure that you learn this as well. So we've already done the obligation, we've done the probability, now the amount. Reliably estimated. Remember that was the 500,000? Where do we get the 500,000 from? How do you know it's 500,000? The court case is ongoing, so how do you know it's 500,000? Where we can find a piece of paper that says 500,000. The court case is ongoing, so you won't get a court order yet. Legal notice, legal notice, yeah, sort of legal notice. But how about the original correspondence from the ex-employee? Because it says the ex-employee is suing a vendor for unfair dismissal and has claimed 500,000 damages. So there has to be some kind of correspondence or the claim itself. Yeah. So that's what I'm going to look at. So I've got the verb, I have got the source, the reliable source of the evidence, and I've got the objective of the test here to confirm something. Okay, I've got a chat here. Yeah, there's some who are asking me, what is dada? Okay, so the first D here is talking about dollar value. Find the dollar value in the exam scenario, whether you have it or not. Okay, the next one is look at the next D is whether it is during the year. If it is during the year, then you will be able to inspect the supporting documentation. If it was last year, then you cannot look at any supporting documentation. You will not get any marks for it because the supporting documentation would have been looked at in the previous year's audit. The first A here is to do with accounting treatment. That means to do with accounting standard itself, to see whether there are any rules relating to recognition, measurement. It really depends on the standard. Some standards deal with recognition, some standards deal with measurement, some standards deal with both. So you have to look at it. Some standards deal with disclosure. Okay, so it really depends. So I'm just putting down the criteria here for recognition because they don't want to recognize it. I need to find the evidence that it should be recognized. Okay, very good. So you've got the ex-employee's claim here, the original claim or correspondence or whatever. Okay, so in your exam, please do not put this one down. Yeah, this one should not be here. Hang on, let me just remove that. Okay, should be here. Your answer should look like that. Okay, so if you are going to do dada, do it on your scrap piece of paper. Apparently, you have got some rough paper that is given to you. I'm not sure whether it's given in all centers or not, but from the people that I've talked to, even in Ireland, they have got paper that is given, Malaysia given. So if you've got that, you can do your dada on your piece of paper. Just make sure you bring along your pen. Otherwise, you'll have to do all your workings with your lipstick. Guys, of course, you won't have anything. All right. So let me just put that back inside there. The last A is whether any assertions have been specified. And sometimes in the audit procedure question, especially in your question 1, the examiner will say, okay, only look at the measurement part of it. So then we're not looking at the recognition part of it. So if you put down any audit procedures relating to recognition, you're not going to get any marks for it. So see whether the examiner has specified any assertions. After doing all of that, we've got 1 mark. Okay, let's go and have a look at severity then. Severity, we've got to do 2 things. Number 1, you've got to think about whether it is material. And number 2, you've got to think about whether it is pervasive, and it's half mark each. Can you tell me whether it is material here? Let me give you some information here. So you've got 500,000. The revenue is 18 million. The PBT is 2 million. The total assets is 58 million. So can I ask you a question? If you're going to calculate materiality, you would divide it by which figure? 18 million, 2 million, or 58 million? Total assets. Okay, so if you divide it by it's 500,000, right? If you divide it by 2 million, you'll get a bigger percentage. If you divide it by total assets, you'll get a smaller percentage. Actually, you can divide it by either. Okay, it doesn't matter. Why? Because, hang on, let's go down here. We are thinking, when you're talking about severity here, we're thinking about the severity of the misstatement, severity of the audit adjustment. Remember earlier we did an audit adjustment inside here? And this one is you debited P&L, therefore you can divide it by the PBT. And here you credited the provision, and therefore you can divide it by the total assets as well. But because the total asset figure is so big, I would prefer to do it against the PBT. Try and get a bigger percentage. So we're saying here that PBT, 16.7%. Is that 16.7%? Is that the percentage? Total assets. Okay. I've got this question here that says divided by total assets. So you can take the 500,000 and divide it by the profit before tax, because we are going to debit the P&L, right? That was the audit adjustment. Or you can take the 500,000 and divide it by the total assets figure. Now, I know this one is a liability, but the total asset figure would represent total liability as well. So that's why we divide it by the total assets. All right. So it affects the balance sheet side. So if it affects the balance sheet side, we're going to divide it by the total assets. So 500,000 divided by PBT of 2 million comes up to about 25%. 25% inside here. Is that correct? I think so. PBT here is 2 million and the charge here is 500,000. So it's 25%. Okay. So how would you write this out? So I'm going to say here that the provision of 500,000 represents 25% of profit before tax. You can use a short form and is material. Okay. We are dealing with an audit adjustment here. Okay, we're dealing with an audit adjustment. Just please make sure that you remember that. And you get half mark for that. And now it is whether it's pervasive or not. So do you think this is pervasive? Is it pervasive here? No, it is not. Why do you say it is not? So if you just say it is not pervasive, how many marks would you get? Yeah, only one item is affected. Is it okay that we use short form in the exam? PBT is fine. Everyone knows PBT. But when it comes to total assets, we don't say TA. We write it out in full. All right. In revenue, you don't just put an R down there. You are going to write it out in full. So if you just say it is not pervasive, you're not going to get any marks because you did not provide any justification. So you're going to say that on its own, because we're only looking at this one item, this represents only one financial statement item and is not pervasive. Okay, now you got another half mark. So here you're only writing 2 lines and you've got a full mark. All right, now let's go to the opinion. Usually when it comes to the opinion, we have got 2 marks inside here. So the whole thing would usually be about 5 marks for the NSOB. Now here I've put down 3 audit procedures. In the exam, I would have only put down 2. Why? Because when you look at NSOB, it is usually 5 marks. And if the whole thing is 7 marks, then I've only got 2 marks left. Let's go on to the opinion. So what do you need to write to be able to get the 2 marks? So in order to get the 2 marks here, we are going to put down what type of opinion we're going to give and the justification. And after that, we are going to put down the wording of the opinion paragraph and the title of the opinion paragraph. So this is all part of understanding how the examiner wants you to think. Okay, so it is not just understanding the standard, it is also understanding what the examiner expects of you. That's important because she's the one who's giving you the marks, right? So let's go to the opinion. So what are we going to write here? We're going to say that if, how many marks would you get? 0. What can I do to get some marks? Remember that whole thing would be 2 marks. Remember here it says justification. Now you need to provide the justification. And remember, when you're dealing with qualified except for, there are two kinds of qualified except for. One is qualified except for misstatement, and the other one is for limitation or scope. So we're saying that qualified except for, very good, seeing that the financial statements, just copying what you're writing here, are materially misstated due to, just copying what you're writing down there. Thank you, Eugene. Due to non-compliance with IS 37. Excellent. Okay, so the point here is that I have provided the justification. So how do you provide the justification? I have got this, seeing that. I mean, those are the words that I use, and it's pretty standard. Okay, I've got a question down here. What if I put down the wrong standard? It doesn't matter. Okay, so let's say I put here IFRS 9, for example. The point down here is that I've already put down the opinion and the justification. All right, but that shouldn't happen, right? Because you have done FR and you've done SBR. But anyway, there's no negative marking here. Don't worry about that. But what I am worried about is that if you get the standard wrong, you might have the wrong recognition criteria and the wrong measurement rules. That's a lot more severe. So now we've got the wording. So the opinion will be worded. Put that down. Except for the, because it's a misstatement here, we're going to say, oops, the effects of the matter described in the basis for qualified opinion paragraph. The financial statements show a true and fair view. ... That'll be fine. That'll be fine. And the opinion para will be titled Qualified Opinion. That's it. I will get 2 marks for that. That didn't take you very much time. Remember, your typing speed in the exam has got to be a minimum of 35 words per minute. Where did I get the 35 words per minute from? So what I did was that I tried out writing out an answer in handwriting, yeah, according to the time, and I find that my writing speed with my hand is about 35 words per minute. So if we're going to perform exactly the same as we did when we were writing last time, then it should be at least 35 words per minute. So your typing speed should be at least minimum the same as your writing speed with a pen. If you can type a little faster, that'll be absolutely brilliant, but do not compromise accuracy for speed, because if the examiner cannot understand what you're writing, you're typing so fast and you're doing that, and the marker is saying, oh my goodness, what language is that? That's from planet Mars or something like that. That would not be good. Then marks will not be given. So when you're typing, constantly watch what you're typing to make sure that at least the marker should be able to understand you. The marker is not looking for spelling mistakes or grammar mistakes. As long as the examiner can understand you, that'll be good. So you've got the opinion, justification, the wording, and the title. So is there an app now to measure? Yeah, you can go to you just Google, how do I check typing speed? My typing speed varies on different days. When I'm starting in the morning, before my fingers have sort of warmed up, my speed is only about 25. But towards the end of the day, when I've done so much work on the keyboard kind of a thing, my typing is a little faster, and then I can be anywhere between 30 and 40. Okay, so I've got a pretty erratic typing speed. Typing.com, yeah, you can have that as well, yeah. And typing.com has got lots of typing games as well. Now, there's one thing here. You need to remember that if you're going in for CBE exams, you need to practice using a desktop, because your keyboard has got wider alphabets, so that your spacing would be different compared to a laptop. So if you're going for RI and you're doing it at home and you're doing it using your own laptop, then that's fine. But if you're going to a CBE center and you only have a laptop at home, please get one of those devices that you can attach to your laptop, another keyboard, yeah, that has got the normal desktop keyboard size, because I find that some students come out of the exam saying that they couldn't handle the typing because they're so used to handling a laptop and they were not ready for a keyboard with a desktop. Just make sure you have, do that, because we don't want anything to slow you down. If you can make 1% improvement in one area of your exam, whether it's an exam technique or typing speed or accuracy in what you write, all these 1% improvements have got a compound effect. We are going for the momentum here so as to launch you or push you into that 70% mark, far away from 50%, so that in the exam you're not like, have I passed, have I not passed? We don't want that. Okay, now we're going into the basis paragraph. Okay, so what are you going to write in the basis paragraph? In the basis paragraph here, we are going to first of all put down what is the content of the basis paragraph, and then we're going to put down the title and the position of the basis paragraph, and all of that will be equal to 1 mark. You need to know this. You need to know the marking scheme. If you don't know the marking scheme, it's game over, because you don't know whether what you're writing is mark worthy or not. You must know the marking scheme. So the content. So we're going to write here that the reason for the modification. The reason for the modification. Okay, now this one is important. What is the reason for the modification? The non-recognition of the provision for damages or legal claim, something like that, okay, will be explained in the basis for qualified opinion. Will be explained in the, can I just take that down and put it here, in the basis for qualified opinion paragraph, and be positioned now. Of course, if you're doing this in the exam, you won't have all of this, and you will not have any of this, and will just look like a normal answer. Okay, so the reason why I get my students to practice with the exam technique, and of course with the table kind of a thing, is that it provides you with a scaffolding. You know, when you build a house, you've got the scaffolding so that your house would go straight up. Yeah, so without the exam technique, without knowing what is your first line, what is your second line, what is your third line, if you don't know what is the last line, then you just keep on writing and writing and writing, and that's going to eat up into the time of your final question. That's not good. So you have to practice with the exam technique. So practice it with several questions. You've got NSOB here. Yeah, practice learning how to divide out your time. Like, for example, we've got 7 marks here. So if you've got the 7 marks, how much time would you have? You actually have got 1.8 minutes, right? So that 1.8 minutes, you're going to take 0.3 here for planning time. So it's about 2 minutes here. All right, to think about the scenario, think about the exam technique. But for a 7 marker, if you know the exam technique, is really so easy. The only difficult part is that if the examiner gives you an accounting standard that is challenging, then maybe you need to think a little bit. Then your typing time would be multiplied by 1.5 inside here. Is it okay if we leave the answer like that after removing? I don't think you can remove the table in the exam, so please do not tabulate anything in the exam. All right, don't tabulate anything in the exam. You don't have this thing here. Yeah. So I don't think you'll be able to highlight that and then go for that. I don't think you're able to, so don't do that. Don't do the tables. All right? People will be wondering which lecturer taught you how to do the tables. The tables will be in your mind. The tables is the rules of how we come up with the answer. Okay? It's really quite easy. So implication for the auditor's report would always be NSOB. Okay, let's have a look at the next question. So next question here, it's the same story, but guess what? I have changed the damages. All right, I've changed the damages. 2.1 million from 500,000. And here the profit figure is 2 million. Now tell me, what opinion would you give me? This time it is 2.1 million. Do you think it will be material and pervasive, or material but not pervasive? Type in your answers. Come on, guys. There's so many of you. Material and pervasive? Because they did not say anything about going concern in this scenario, I don't think, in Abanda. They still have got a total...
Said, but it is turned into a loss and substantially material compared to profit ratio revenue.
Okay, you have got a valid point. The 2.1 million will definitely wipe out your profit. So it will go from a profit to a loss. But remember, we were saying that if it goes from profit to the loss, it is still only material.
No, it's one-off event, or it's like something that's recurring. What causes the damages?
This one, the lawsuit just now, we're still doing Abanda. So, yeah, okay, very good. So this one is exactly the same as the earlier scenario. All I've done is I've changed the 500,000 to 2.1 million. Straight away turns a profit into a loss. So most people would say that it is pervasive, but it is not. It is just material by impact. Very good. It's material by impact. Turns a profit into a loss, which is good. But there's nothing here mentioned about going concern. You can only bring in going concern if the examiner mentions going concern. Otherwise, do not bring it into your answer. Even if the damages are 2.1 million, they still have got total assets of 58 million somewhere. Hopefully, they can liquidate some of that 58 million to make the payment for the 2.1 million. But if the examiner does not bring in anything about going concern, do not bring that in. Okay. So here, what would be the answer? The answer would be exactly the same as this here. And I'm going to copy paste that, writing it all out again. The nature would be exactly the same, except that here would be the 2.1 million provision for legal claim. All right, you can use short form M in the exam. Everyone knows what that is. And the further audit procedures will be exactly the same. The provision of 500,000 material, or even if you just put down the material by impact, that would be fine as well. On its own, it represents only one item. So that's why I said whenever you turn a profit into a loss, go into that adjustment to see how many items are affected. If there's only one item that is affected, then it would still be only qualified except for. So here, under the audit procedures, here would be that 2.1 million here. And therefore, my answer here would change here under the audit procedures, 2.1 million. So just changing all the 500,000 to 2.1 million, that's all. So the provision of 2.1 million will turn the profit of 2 million to a loss of 100,000 material by impact. Okay, the rest of it is exactly the same. Exactly the same. All right? Okay, now let's go on to another question. With the going concern thing, always wait for the examiner to give you a hint unless you are doing a business risk question. Yes, we are looking at the cash that they have at the moment, and we need to be able to see whether they are able to afford the cash outflows or not. For business risk question, yes, the examiner will not tell you anything about going concern. You will have to make that assessment by yourself. But everywhere else, wait for the examiner to guide you into going concern, because when you're going into going concern, it's a totally different standard and there are different rules. So the examiner has to make it clear that you are to move in that direction. All right, and we'll look at that in a minute, okay? So here you got Abanda. Again, we're going back to the 500,000, but you know what? After that, there's another part to the question here, a trade receivable. And it says, in respect of each of the matters, to assess the implications of completion of the group audit, explaining any adjustments that might be necessary, and recommending any further procedures, exactly the same question that we saw, and to describe the implications on the group auditor's report. So you will have to look at each of those matters. The examiner is giving you 7 marks here, so you'll have to do NSOB for each one of them, and then look at it in aggregate as well. So on the area of trade receivable, hang on, let's go to the question here. What is our year end here? The year end is 31 March 20x5. It is 1 July, so the audit is over, and the annual report is due to be released next week. Year end is 31 March. On 1 May 20x5, in the post-balance sheet period, a notice was received from administrators dealing with the winding up of Cooley following its insolvency. The notice stated that the company should be in a position to pay 10% of the amounts owed to its trade payables. Maiden, the parent company, includes a balance of 1.6 million owed by Cooley in its trade receivables. Okay, we're following NSOB. So in the exam, hang on, let's look at Cooley. Let's just try and get a shortcut here. Okay. You have to do it individually first. I've got a question here in the chat. You have to do it individually first because the exam question does say in respect of each of the matters. Then we are going to look at it in aggregate as well. I'm just saving a little bit of time. Of course, in the exam, you can't do this. But in the exam, you've got your exam technique inside your head. Okay, let's start at the beginning. So what is the story here? The observation here would be the story. What would be the story here? The story here is that you have got the receivable. Oops. Only 10% will be paid. Now let's go and have a look at the accounting treatment. What would be the accounting treatment? Give me some ideas, guys. IAS 10. Okay, so let's bring in IAS 10 first. Adjusting event. For IAS 10, if you mention that this is an adjusting event, you would have to provide the justification. So what is the justification here? Further evidence. Something like that. This is an adjusting event because it provides further evidence that this company, Cooley here, was probably already broke at the year end, and this is just a confirmation. The accounting treatment, what does this mean for you then? What needs to be done? This one is not expected credit losses. This one is an actual loss. This is not expected. The guy died already. The company is already in liquidation, okay, or in administration. So it's not so much of ECL. Oh, okay, write off. Okay, so how much needs to be written off? Can you be more specific? Therefore, you have got 1.44 million to be written off. Your English doesn't have to be perfect. The reason why my English is not perfect is not because I'm bad in English, but I'm just trying to save a little bit of time. You know, those extra words can be taken off. Yeah, so it's not allowance, it's write-off. Okay, because this one, you're not going to receive it, and the write-off is going to be 90%. Very good. So the reason why I want to put down the dollar value is because later on I need to put through the audit adjustment. Yeah, so consequently, remember they said that they don't want to put through the adjustment? Oops, overstated. So the adjustment required here would be to debit. What would you debit? Operating expenses. But you got your debt that is written off. EXP will be fine, 1.44 million. And what are we going to credit? Receivables. Very good. Okay. This guy is dead already. He can only give us back 10%. No, this one is not expected credit losses. This one is an actual loss. We're writing it off. We're never going to recover this again. It's going to be a miracle if a company that is at this stage is going to come back alive. We're just writing it off. That's it. It's a loss. They're gone. All right. Okay, we put that down. So if the adjustment is not made, the financial statements are misstated, there's not a limitation of scope, you put all of that down, you get that 1 mark. So your answer is very organized. Every time you do an NSOB question under the nature, we've got OACAN. Makes it very clean, very clear. Of course, if this one is a limitation of scope, you only have got the O and the N because the ACA there is for accounting treatment, isn't it? Yeah, you got the accounting standard, you got the consequently, you got the double entry, which we do not have if we have got a limitation of scope kind of a question. So either way, we are still going to use OACAN as a way of thinking to get that 1 mark. We have to get every single mark that is possible. So under further audit procedures, now help me out here. Let's apply DADA. Of course, in your exam, I'm not going to put down Dada inside there. The examiner might be thinking, oh my goodness, you're missing your dad or something. All right, so we're not going to do that. But Dada is going to be in your head or in your scratch pad, okay, in your paper, whatever. So let's start with the first one, dollar value. Give me some ideas of the dollar value. What do you want me to verify? Oh, sorry. Okay, can we look at the question? Forgive me. Sorry. Okay. Any dollar value? Can you see any dollar value here? Yeah. I can see a dollar value here. And I can see, well, this one here as well. This one may not be a dollar value, but it translates to a dollar value. So here I'm thinking of that 1.6 million. And I'm also thinking about the 10% recovery, or rather the 90% write-off. Okay, I'm thinking here that the 90% here needs to be written off. Yeah, okay, so you've got the 1.6 million inside here, and the 90% here is equal to how much? 1.44. Very good. Okay, I've already done that for you earlier. Now, how did you get the 1.44? Of course, I've already done it for you here, but if you had not seen that, you would have gone to your calculator, and therefore we can recalculate that. And you have got the accounting standard here. So this one is during the year, right? Oh, sorry, it's after the year. After the year end itself. So, okay. And what accounting standard? We have got IS 10 here. IS 10 inside here. And, but there's no real recognition criteria or anything like that. I need assertion specified here. No, the main thing here is we're looking at the recoverability of the debt. Okay, so what's the first thing that we're going to do? We need to confirm this. We need to confirm that this event actually happened. How are you going to confirm that it actually happened? We need to know that they've gone into liquidation. So how do you know whether they've gone into liquidation or administration here? The administration, they've gone into administration. That means we need to look at the letter from the administrator itself. Okay? I get 1 mark for that. The other one is I am going to inspect the notice from the administrator. I'm using the same thing again, but I'm looking for another piece of evidence here to confirm the recovery is only 10%. So I can make use of one source document twice. Normally, it would only be twice. So I can make use of that to get 2 marks here. And I'm only thinking about 2 marks here. Yeah, because NSOB has got 5 and they're only giving us 7 here. But never mind, let's just think about it a little bit. So I have already done that. Now I want to confirm the 1.6 million. Assuming that marks are not limited in the exam, how would you confirm the 1.6 million? How would you confirm that? No, you can't inspect the cash book. This balance here, that 1.6 million, how can you verify that? This is a balance owing from a receivable, right? So how would you normally verify that? Normally verify the balance, not the age. No point looking at the age. This guy died already. He's already in administration. So no point looking at the age. Yeah, we've already got confirmation. Very good. So the confirmation here. So we are going to obtain, because it's the administrator who is going to answer us here. It's debtor confirmation, actually. Direct confirmation from the administrator. So we've got the 1.6 million. Assuming that the examiner gave you a little bit more marks, it's not written representation, it is direct confirmation. Written representation, there are only 2 places that we get that. One is written representation from management, and the other one is written representation from the lawyers. Okay, so this one is a normal receivable. We just want to confirm the amount, because the reason why we want to do this is this. We know we're only going to get 10%, but if the original balance is wrong, then the calculation of the write-off would also be wrong. Is that right? So we need to confirm the 1.6 million. All right? Okay, so now that we've done that, assuming that in the exam we've got some more marks, and of course we don't here, but what else would you do? Is there any other number here inside data? Would you want to recalculate? The write-off. Yeah? Recalculate the write-off. Very good. So what do you want to recalculate here? Oops. And is there anything else? Are you sure that we should only write off 1.44 million? Are you really sure? Well, the letter said that, right? How do you know that the administrator was not bluffing? Maybe they're not going to give us anything. And if they're really not going to give us anything, then we're going to write off 100%. So how would you know it's really 1.44? I mean, based on the letter, it's 1.44, but how do you really know? Any ideas? Come on, guys. We need to make sure that the write-off is really 1.44 million. Yes, we've got the letter, but how do you know that it is really true? No, it isn't. No, it is not an estimate because the administrator has already told us that he's only going to give us 10% and therefore we're going to write off the 90%, right? But how do you really, I mean, can you really trust this guy? This administrator, can you really trust him? Yeah, which is...
legal authority.
No, it's that one we will do if we're looking at it from an expert point of view. Yeah. But in this case, the easiest way is to look at the cash book post year end, whether he has kept his promise. He promised to give us 10%. So in the post balance sheet period, so we're going to inspect. That's right. Check whether the 10% has been received. So inspect the cash book post year end to confirm monies received. So we will only check the reputation of the expert if we're dealing with the expert. Here, with the administrator is saying, yeah, we will give you 10%. But you've got to understand that if you are the administrator and you're dealing with a company that is going kaput or has gone kaput, has gone into administration, I'm just wondering whether at the end of the day, we will really have the 10%. Because this ship is sinking. Yeah, they want to give us 10%. So the only way that we would really know is by looking at the cash book post year end to confirm monies received is actually equal to 10%. Because if after the year end he is giving us only 5%, then our write-off has to be 95% and not 90%. So materiality here. Tell me, what figure are we calculating for materiality? The figure that we are calculating would be the misstatement. Remember, management does not want to put through the adjustment, so we've got the 1.44. All right. Now, the 1.44, all right, so the write-off of 1.44 represents, okay, now tell me, do you want to divide it by the PBT or by total assets? Okay, let's have a look at this. If you divide it by total assets, you're dividing it by 58 million, you'll only get a tiny percentage compared to if you divide it by the PBT, you're going to get a bigger percentage. Can you divide it by PBT? Yes, because the double entry here that we're talking about here is to debit operating expenses, 1.44 million. So we can divide it by the PBT figure and we can divide it by the total asset figure. But I want something that is going to have a bang. I want to have a bigger impact so that my audit opinion can be more, can be easily seen. So go for the smaller figure. Can you see that? I know you can divide it by both of them. Yeah, today's recordings will be available on YouTube. I'll put it into my YouTube channel. Okay, and if you want to get in touch with me, you can. This is my WhatsApp number. If you want to get into the online chat group, the AA chat group, I've got 3 different groups. Okay, so if you're on one of my programs, then you are either in the bootcamp chat group or in the self-study chat group, and everybody else is in the online chat group. And I still provide lots of tips inside there. Okay, so you can always WhatsApp me and you will know when the videos are uploaded onto my YouTube channel. All right, in case you want to have a look at it again. Okay, so let's come back here. So represents, we're going to look at the PBT because it's going to give you a bigger percentage, and represents 72% of profit before tax. On its own, this only represents one financial statement item, therefore it's not pervasive. So remember, the exam question says each, so we're looking at it individually first. Okay, so the rest of the answer is going to be exactly the same. If the adjustment is not put through, blah, blah, blah. Yeah, it's still the same thing. But what if you're looking at the adjustments now in aggregate, the impact on the group auditor's report? So here, you don't have to explain the accounting treatment again. You don't have to go through OACAN again. We've already done that. We're now looking straight away at the severity of it. So if I'm doing this in the exam, I would always put down my headings. I know where I'm going. Marker also knows where I'm going. All right. Will the marker understand the meaning of the word nature and severity? Absolutely, because that's taken from ISO 705. In ISO 705, we have got the qualification matrix, if you remember. And the matrix looks something like that. Okay, this is the nature of it. Yeah. And nature here is whether you've got a misstatement or a limitation of scope. And then here you have got the severity of it. And under the severity of it, you've got the material but not pervasive and material and pervasive. So I'm using these words, and these words are from ISO 705. So your marker should know them very well. Okay. All right. So now let's have a look at materiality. Two adjustments. What were the two adjustments? The 500,000 provision plus the 1.44 million writer. Okay, the two adjustments. Will it be material? Would this be material? Yes. Okay. Represents how many percent? Yeah, I know. 97%. Okay, 97% of PBT. Or you can also say that the two adjustments, if put through, will turn a big profit of 2 million to a tiny profit of 60,000, and therefore it's material by impact. I'll accept that as well, as long as it's material. Yeah. There are three kinds of materiality. Remember, material by value, material by impact, and material by its very nature. That one is to do more to disclosures. Now we're dealing with the pervasive. Is it pervasive? Is it pervasive? We've got yes. How do you know it's pervasive? So this one is going from a big profit to a small profit. Okay. How do you know it's pervasive? You have got more than one adjustment. All right, I'm providing there is a justification. So Joshua is asking here, so as long as there are more than one item, it's pervasive. Actually, in real life, it's not. Like I told you, in my experience in EY, I've actually seen situations where the audit report has got 3, 4, 5 areas where there is a misstatement and still it's not pervasive. But for the purposes of your exam, it has to be so, because your examiner cannot give you 10 items. All right. So I've got a question here. Can we say that considering the only 2 items? No. It is pervasive. It is pervasive in this case. First of all, it represents a substantial proportion of the PBT. Yeah. Remember the definition here. Let me go back here. Okay. So definition of pervasive here, it is not confined to specific elements. That means it's not limited to just a few, but if so confined, that means if it is confined to a few, in our case, for purposes of exams, let's take it as more than one, represents or could represent a substantial proportion of the financial statements. And in this case, the adjustment affects 97% of your PBT. So how do you know it's pervasive? It is not confined to specific elements, meaning that it's not confined to only a few, it's many. But if it's so confined, if it's only a few, it represents a substantial proportion. Therefore, if your problem is only one adjustment, like here, we're talking about if this is only one adjustment and it turns from $100 profit to a loss of 10, it will still be material but not pervasive. Why? Because it's only one item. But in the exam, if that 110 is made up of 2 items, I would say it's material and pervasive. Okay, so it's important to understand that going into the exam. So I've got my 1 mark inside here. What was that question here? Can we get the same mark? No, if you say it's not pervasive, you will not in order to get the mark for pervasive, you have to provide a justification. My justification is that it represents a substantial proportion of the PBT, and there are 2 items that are affected. So after that, we are going to go to the opinion. So what would you say on the opinion? I'm not going to write the whole thing out. I don't have the time. So what is the first thing you're going to write about? We're going to write about the opinion and the justification, yeah? So what is the opinion and the justification here? What kind of opinion are you going to give? Adverse opinion. Now, if you merely say it's an adverse opinion, you're not going to get any marks. So what is your justification? Okay, yeah, it's adverse opinion. Correct. It is adverse opinion. Now let's go back here. So if you're going to say adverse opinion, you're going to say adverse opinion because the misstatements are material and pervasive. You could use those words, examiners using those words in the examiner's report. Or you can also say because it is adverse, seeing that the financial statements are seriously misleading. And that will be fine as well, because earlier I've already talked about material and I've also talked about pervasive. So I'm saying it's seriously misleading. Okay, then after that, we're going to go into the wording. So please make sure that you revise the wording of an adverse opinion. So you're going to say that because of the significance, blah, blah, blah. All right. And then after that, you're going to go on to the title, and the opinion paragraph will be titled Adverse Opinion. Okay. Then under the basis paragraph, what are the things that you're going to write about? The first thing you're going to write about will be the content. So the reason for the modification. In this case, there are 2. So just put that down. Financial statements are not true and fair. Seriously misleading. Okay, you can also say that the financial statements are not that is also possible. So under the basis paragraph, the first thing we're going to talk about is the content. That the reason for the modification, so put down the 2 reasons inside there. We'll be explaining the basis for adverse opinion paragraph. So that would be the title. And then after that, the positioning and the position immediately following the opinion paragraph. Okay,